you all so much for joining. The Fintech Club is presenting you an interview with HedgeTech co-founders Laurent Benayoun and Tom Q. We will be discussing with you guys a little bit more about your history with HedgeTech, how you chose to found it, what industry specifically you guys work in, and the direction that this industry will be going, and potentially opportunities for Darden to learn more about this, to get more involved, and to stay on top of an ever-evolving new space. So with that, I would just like for you two both to start off by introducing a bit of your background and your experience. And maybe after that, just an overview of what HedgeTech is.
Sure. Tell me, want to start?
Yeah, so I was a futures trader in China back in 2014. And after I come to US and I get to know about the market of cryptocurrency, and I worked in a company that does a little bit crypto market making and consulting. That was the same company that Laurent worked for, and we knew each other, and we decided that we can do something on our own, and then we started this company much in 2018.
Yeah. So my background is in math and econ, and I was trading when I was still in school, here and there, but it was all manual. So essentially, I was placing orders myself. And so I started working for this company that Tom mentioned. It was doing sort of consulting and crypto. And so from there, I realized that Tom was actually an algo trader. So essentially, he was automating strategies. I was like, okay, that's pretty cool, because essentially trading, once you have strategy that is working, it can become pretty boring, right? It's very repetitive, and so you really don't want to do this manually if possible. And so I was like, okay, this is cool. And in my mind, algo trading was something that was very inaccessible, because you needed a lot of funds, to build the infrastructure, because I was mistaking algo trading for high frequency trading, which is not necessarily the case. And so I thought you need a crazy infrastructure, you need lots of funds and knowledge that I probably don't have. But it turns out that algo trading is fairly accessible. And so from there we started bonding over the topic. And we realized that there was an opportunity more specifically in market making for digital assets. And so that's where we created HedgeTech, essentially. Yeah.
Amazing. There were a bunch of terms that we will unpack throughout the course of this interview that may be new to some people, maybe everyday terms. But before we get to that, just given the audience and our club being FinTech, I would love if you guys could take a moment to just explain maybe what FinTech means specifically for your company and your industry, and why you chose to go to this algo trading, much more FinTech space rather than other conventionals.
Yeah, so FinTech is basically an application of technologies in the finance industry. So for example, traders, every time when you talk about traders, in a lot of people's head, there might be a guy sitting in front of a computer with a million screens in front of him, and he has to monitor the market whenever the market stays open. So what technology serves is that first, this guy wouldn't have to stay in front of the computer all the time. So the algorithm will take care of it. So it frees the manual labor from people in the finance industry. And the other thing is that the algorithm eliminates the bad influence of human emotion on their action. For example, every time there's a hype in the market and people get overhyped and they just come in the market blind listening, and also when there's fear, they just dump everything in a panic sell. So, but leaving these decisions to algorithm can eliminate the negative influence of the emotions.
Mm-hmm. And and fatigue and all of this that humans are prone to. But there's also something else, is that really FinTech is right in the intersection of finance and technology. And for us, sometimes the limit kind of is blurry, right? For example, just to give you an idea, some people would categorize us as financial services when we don't consider us financial services, right? Technically, we're a software provider. Essentially, what we do all day is to build, algorithms that people are going to plug into their accounts to do certain things. These things could be providing liquidity to the markets on their own markets. So just to give you an example that you may that may be that may like speak to you essentially. For example, when you list on NASDAQ, right? So you go public, NASDAQ will require that you have certain liquidity providers, a certain number of them. And so what you can do is that you can use, for example, a custodian that will have like accounts that are funded and on both, both assets. So essentially, if you're doing a security, it could be the security and US dollar, for example. And essentially what we do is that we build a software that will enable the custodian to place those orders to provide liquidity so that anyone can trade essentially. So this is one type of algorithm that we develop and, like clients deploy on the infrastructure that we build. So yeah, that's what fintech really is to us, is essentially like a low sort of like barrier to entry type of thing where you use technology to have financial applications.
I love that. And I think it resonates with the theme a bunch of us know, which is using technology to democratize an otherwise exclusive industry. So yeah. Appreciate you guys called that out. One of the terms you guys have thrown around a lot is algorithmic trading. I'd love to learn how you guys got involved in that. And if you were programmers when you started off in the financial industry, or how you built that skill set to choose a company in that space.
So for me, I started as a manual trader. So in commodity futures market. So, and then one day I feel really bothered to having to stay in front of the computer all the time. And I was thinking, is there a way to do it automatically? And then I discovered algorithmic trading. So basically, it doesn't require very advanced programming skill set. It's fairly accessible, and you can just write a script and it will take care of it. So you don't have to maintain a very long uptime.
Mm-hmm. And for me, it was like meeting Tom essentially and discussing algo trading. And from there, I had a strategy that we automated, like both of us. And then I was like, okay, like there's potentially like something to do with it. And now that's what we do all day essentially. Yeah.
Awesome. I think that's great. And, Laurent, one of the things you talked about earlier is the intimidation of infrastructure and getting an algo trading fund started. So can you talk a little bit about your operations from that perspective and how you guys overcame that barrier?
Yeah. So in the beginning, it was very like basic. Like when we started off the company, we had sort of like the strategies laid out, but we had no infrastructure to run them on. So at first, it was a very short period of time, but we got caught up essentially, like we were sort of like trying to promote what we were doing. So we got caught up with like the first people who were interested in what we were doing. So at first it was running locally, which is a terrible idea, of course. And then very quickly we moved it onto virtual machines, but they're still sort of like user interface based, right? So essentially you interact with them, but you still have to, like sort of like manually configure those instances, those virtual machines and stuff. And this was very like painful. It was time consuming and it was not optimal at all. And then we found a way to sort of like move the infrastructure to another level where essentially we would achieve like a much bigger like scalability. And the way we designed it is somewhat proprietary, but essentially we build everything from the ground up. So the only thing we use is like a cloud computing provider. But other than this, like everything was built up from the ground up. So the way, the different components of the infrastructure communicate between each other and what they each accomplish, sort of, as well as the strategies, of course, is all designed in-house. So, yeah.
So what do you think? It sounds like cloud computing was a huge innovation that's made your business possible. What do you think some of the next innovations that will revolutionize either HedgeTech itself or algorithmic trading as a whole?
The next innovation could be, it should be something in regards to scalability. So the cloud computing service that we have today, not all of them are very scalable, which means that when you expand the number of algorithms that you are going to run, you need to do a lot of manual configuration. Mm-hmm. So I think the next step would be some cloud computing resources can be distributed in a decentralized manner, which means it will scale automatically without with less and less manual intervention.
Yeah.
Another thing could potentially be applied to this is quantum computers. Actually, some algo trading firm are already using quantum computers or quantum virtual machines to run their algorithm. This can massively increase the number of algorithms that can be run on a single device or a single virtual machine.
Yeah. I
So
think that's perfect too. Yeah.
Do you think that one day human run trading will become obsolete and everything will be done? I know quantum computers are often a term thrown around for kind of the end of human intervention. So I'm curious you guys' take on that.
Yeah, I think manual trading is already somewhat obsolete.
Yeah. So like if you look at data from, like exchanges, they'll report that at least, I don't know what it is, like 70, 80% of, like the daily traded volume is already operated by bots essentially. So it's somewhat becoming obsolete already. And I think that, we're going in a direction where, like there will be humans dealing with, like server configuration and maintenance and so on, but it will be more on an infrastructure level rather than on like a sort of like being on the ground and just crunching some orders and stuff. So
yeah, but still, we still need humans to actually design these algorithms that is running on the computer. Maybe in the future there will be algorithms that creates the algorithm, but there still needed to be human to design these algorithms that designs algorithms.
Yeah, and actually there's a big misconception in algo trading is that sometimes when you talk to people, they're under the impression that, you just plug in. So it's like a black box, right? You have some inputs, you have an output, but you have no idea what's going on in between. And in fact, like when you're an algo trader, you're designing the algorithm so that you know exactly what is going to happen in every market situation. I'm not saying you can anticipate all market situations, especially in crypto, because it's all over the place. But if you look back, you can know exactly, like it's possible to determine why the algorithm reacted in this way, and it's a very precise process. You don't have to, like, even if you include machine learning, in fact, like you don't have to have like a black box, and you can very well sort of like explain what's going on with your strategies, for example, to investors or to people who are interested in running them.
Yeah, I think that sounds like a exciting new place to go. I know one of the things that you guys specialized in is market making. And as someone who maybe only interacts with cryptocurrency via a Coinbase account or another wallet, market making in the crypto space can sometimes be its own black box. So will you guys spend a few moments just explaining what the term market making means and specifically what it means for HedgeTech in the crypto market?
Mm-hmm. So market making is actually very simple. For example, you trade from your Coinbase account, you buy Bitcoin, and there has to be a seller who sell Bitcoin to you. So what they do is that they place a maker order, that their order will stay on the order book so that you can fill these orders. If there's no market maker, you cannot buy or sell Bitcoin. Yeah. So the difference between you and these guys is that when they buy or sell, they don't buy or sell immediately. They create an order that is standing and waiting for other people to take this order.
Yeah. So the difference, so there are two types, broadly speaking, of orders. There's maker order and taker order. Most likely when you go on Coinbase and you press buy, right, you're placing a taker order. So essentially you're buying at whatever market price there is. If you were to buy like 500 USD, you wouldn't have a big difference between whatever price you're shown and whatever price you're executed at. But if you place like 500,000 or like 5 million, all of a sudden you're going to have what we call slippage. So essentially a difference between what you're shown and what price you actually get, like whatever you're buying at. And so essentially what market makers do is that they make sure that slippage is as small as possible. So we make sure that markets are efficient and there are enough orders to cover, like people coming into the market and out of the market in somewhat desired quantities. course, that's why there's OTC, over-the-counter trades or deals rather, because if you have like a massive quantity, for example, you're a Bitcoin miner, you have 1,000 Bitcoin and you go on Coinbase and you just sell 1,000 Bitcoin, you're going to get a terrible price. So that's not adequate. But like for like the retail like traders and investors, it's perfectly doable to go on exchanges and just use whatever order book they see. And in fact, one of the cool things in crypto is that the order book is public. In what we call like traditional markets or legacy markets, like you get access to some levels on the order book, but if you subscribe to market data, but it can be costly, and usually like they keep like the levels somewhat confidential. So but in crypto you have access to usually the full order book, so you can see everything that's going on. That's not to say that there's not bad stuff going on in crypto. You have order spoofing on certain exchange. We're fairly aware of this, but in general, on somewhat reputable exchanges, you have solid market makers who are here to actually make the markets efficient.
Wonderful. Yeah, the market data is what I used to do, so I'm sure they absolutely love the public order book. That makes their job much harder. One thing that's new to me is the idea of market making strategies. So I would love to learn a little bit more about how you guys categorize different strategies, if you have multiple strategies within HedgeTech, a little bit more color around those.
So there are two types of strategies in general. The first type is profit-oriented. So profit-oriented is actually no different than the regular alpha strategy. The main goal is to make money. So the only difference is that maybe some hedge fund strategy, they place market orders in order to make money, but market makers place macro orders in order to make money. So the second type is called designated market maker. So designated market makers are usually hired by exchanges or the asset issuers because they want their market to be more efficient. So they hire a market maker to place these maker order so that their user can have less slippage. Mm-hmm. So yeah, these two depends on what objectives you have.
And then if we get into a little bit more detail, so there's, as Tom said, there's profit-oriented, liquidity-oriented. If you go into like the liquidity route, for example, we have some strategies that are either categorized as pure market making. So essentially you don't look at what's going on elsewhere, right? You're on your exchange, you focus on this market and that's it. And then we have other strategies that are sort of like linked to other markets, right? So for example, say you have a very liquid market on exchange A, a very poorly liquid market on exchange B. What you can do is that you can sort of like take liquidity from one exchange, migrate it to the other one. And so there are multiple strategies, whether you're talking about a centralized exchange, we can talk about this in a second as well, whether you talk about a centralized exchange or a sort of like liquidity pool or decentralized exchange. And you see, so in every sort of like scenario, you will have a different type of strategy because you have to accommodate a different sort of like infrastructure types, I want to call it.
So I'm trying to think of who are some of the major players that you guys may interact with, and maybe what does that mean for your previous comment of the different infrastructures you have to accommodate?
Yeah. So most of our clients, we can categorize in three types, essentially. The first one is token issuers. So say you create your own currency, you have a project, and you back your project using that currency. You also want to make the market liquid, right? So that people who actually entered at some point can actually exit, right? And vice versa. People who learn about the project more recently can enter the market. So issuers, just to give you an idea, I don't know what, for example, Ethereum is a token. I mean, it's more of like a coin, whatever. But it was issued by Vitalik and the foundation. There are others like like Cardano, like Polkadot. I mean, there are a bunch of like very famous tokens out there. That's the first type. The second type is exchanges, right? So, for example, we cannot name clients necessarily, but we're in conversation with the biggest ones. Like Binance will be Coinbase Pro, not the one that's like the version that is sort of like the light version of Coinbase. Bitfinex, and so on. So that's the second type of clients. And the third type is other market makers. This is for us specifically. So essentially, because we're a software provider, we can provide our technology to other market makers who will then, serve as, issuers and exchanges. And that's a pretty cool feature, is that technically we're able to turn quote unquote competitors into clients.
That's, yeah, anytime you can turn a competitor into a client, you kind of won both games, right? Maybe this is a great segue to understand a little bit more about why your clients of all varieties love working with HedgeTech versus any of your competitors.
So in general, I think the best part of our service is that we are very customizable. So we usually have no issue to customize the algorithm exactly to what our clients need, instead of just offer a very standard thing that is very hard to be changed.
Yeah, there's also like another aspect that is like more on the client relation side. Essentially, like we're very responsive. Like we're a small company, so obviously, we have to provide the best service we can. So we don't count hours. We're trying to be on like for as much as possible. Crypto markets never close, right? And we have clients who are like in Asia, Europe, and Americas, and so we have to be able to be on like almost 24/7 every day of the year. So customizable, responsive, and I would say, security is a big thing, in this industry. Like trust is built on top of like what security can provide. And so the fact that we're a small company, we don't sort of like trust other parties, or we don't necessarily have like trust issues that are inherent to bigger companies, for example. So that's why also people would want to work with us, because they're not scared that, for example, like someone is going to leak, whatever account keys that they provided to connect to their accounts or something like this. So yeah.
Yeah, we just did a session on data privacy in the financial space. So I think that resonates with people here as being foremost in a lot of large providers' minds. One thing you guys touched on that I'd love to tease out a little bit more is the customizability of your algorithms. I know one thing that we faced a ton was this threat of commoditization of different strategies, right? And essentially, if one person's selling multiple strategies to the market, more or less you've lost your defining edge. So I'm curious, how much of your interactions with your clients is a consulting-based engagement and a recommendation versus a more like an instruction-based, they tell you what they would like to and you guys execute?
So it's more like an instruction-based. Yeah, so we have different strategies that serves different purpose, and the clients decides their purpose and then choose the algorithm that matches their purpose.
Yeah,
we don't actually give advice to our clients.
Yeah,
we act more like a tech support.
Right. So essentially, like this is also for regulatory, reasons, right? Like if you start giving advice, all of a sudden you're like sort of like you're giving like investment advice, which is probably not a good idea if you're not regulated. So that's why we're like more of like a like a tech sort of like provider, right? We sort of like just focus on whatever their needs are, meet those needs, and go with whatever instructions they have, rather than. But like for example, we have exchanges who like recently we had an exchange coming to us, and they have very specific needs, right? They need to run multiple layers on the order book, and they need to use different scripts, and in fact they need to tweak how the scripts actually work to meet certain needs, because they want a certain shape of the order book, and they need to, so they're competing in terms of spread with another exchange who's based in the exact same sort of like region of the world. And so they want to also be able to see what the competitor is doing, and sort of like make sure that they're always under the spread that the competitor is having at all times. So you need to customize a script that is going to be able to watch whatever the other company is doing. You need a script that is going to be tweaked in order to have like the right shape of the order book, and so on and so forth. So like we have sort of like the backbone, but everything is very customizable to whatever we're asked to do. So
Perfect. Yeah, this sounds, it sounds like there's a ton of similarities between equity trading and what I can think of going through old order books and everyone designating shapes. So I'm curious, you guys specifically chose to focus on digital assets rather than any of the other markets. Where do you guys see your role in this ecosystem, and why did you choose that particular asset class?
So basically, what we are doing here in digital assets can be applied in the traditional finance as well. But the point is that for digital assets, it's much more accessible, and the administrative process is much less complicated. Yeah. So it's I would say it's a good place to start from, and also the accessibility of the data of the exchange data is much better. So for example, an exchange like NASDAQ, only the selected member can access the order book, but in a crypto exchange, everyone can just access it. So for a company that is looking to set up, you don't need to hire so many lawyers when you just get started, just to have the access to a lot of things.
So yeah, there's this sort of like a barrier to entry that we didn't have in crypto necessarily. Now it's getting increasingly complicated, right? Like everyone is trying to regulate crypto one way or another just to get like sort of like a piece of the pie, which is understandable, and we're fine with that. But honestly, like for example, we were not funded at all. Like we were like sort of like privately sort of like funded initially, but it was very minimal. And so this is not doable if you're going into, you know, traditional markets right away. And if you want, for example, to have like a BD license, broker-dealer license or something like this, you start to look at, you know, six-figure, you know, fees for lawyers, and then you have to, you know, take like series and get approved by FINRA, whatever regulatory agency there is for those markets. So, and it's a lengthy process, and you need to show that you can sustain, you know, the company for like a number of years without profits and so on and so forth. This is a problem we didn't necessarily have going in. And also this is something that tech allowed us to achieve as well, right? Like, you know, like anyone can just like go ahead and build their own stuff very easily or somewhat easily and market it right away. That's why there's like a surge in, you know, like software engineer needs and stuff like this, because, you know, like essentially you can build your own thing by yourself and you don't need a lot of means.
Actually, another reason why we do exactly the way that we do is that we only focus on the software part. So we actually don't necessarily classify ourselves as traders. What we do is that we build the algorithm so other people can use our algorithm to do whatever they need to do.
Yeah.
So that we don't need to take any kind of custody, and we don't have to actually hold other people's money, for example. This reduced the complexity of the legal aspect.
Yeah. And where, to answer the question, where do we see ourselves? I mean, there are a lot of market makers now. It's in crypto. This is something that is increasingly popular, and something we have noticed with those market makers is that usually they lack scalability critically, because usually, you know, they start small, obviously, and they don't have like an entire floor that can trade for them and monitor, you know, markets at all times. And very quickly in crypto, you're going to have hundreds of markets under your management. And so you need to be able to sort of like manage everything from, if possible, from one monitoring system, and to be able to control very easily and so on. So what we're building is something that will enable like one trader to essentially monitor hundreds of markets at once. So that's on the scalability part. And it's already built, actually. I mean, it's already on the market. And then the other part is integration capabilities. So if you look in crypto, I mean, in traditional markets, you have a number of exchanges, but it's much more sort of like limited compared to crypto. In crypto, you have hundreds, if not thousands, of exchanges. Not saying all of them are good, but, you know, still, you need to be able to integrate on a bunch of different venues. And for this, you need to be able to integrate fast and integrate efficiently. This is something we do fairly well because, you know, we have experience in it, right? So some of the companies, some of the market makers actually that we talk to, take, like weeks to integrate on one given exchange, we take a couple of hours. So, you also have this sort of like improvement right there in terms of efficiency. So, yeah.
Yeah, I think that's great insight as to what is going on in that industry and where you guys see yourselves. I'd love to tease a little bit more out about some of the projections you guys made for the future. Speaking of scalability and integration, digital assets and cryptocurrencies have been around for at least a decade. I'm trying to remember when the first paper ever came out on crypto, but I think it was sometime in the mid 2000s. And they have a huge, wide range of trading possibilities. They become far more commonplace now. I'm able to have a very generic Coinbase account. And there's a ton of possibilities with regards to spots or margins or futures, which I know, Tom, is your old world. So where do you guys see this market and this industry growing, and what to you is so engaging about its future?
So I think that one cool thing about the crypto markets is that they evolve faster, because essentially it's like the small, like the little sort of like sister markets of the traditional markets. So essentially, when we started, there was only almost only spot trading. As you said, now there's like sort of like futures, commodities. There's even like, we saw something recently, was a diamond commodity. So essentially, you can trade gold, you can trade silver, whatever, and you have like a certain price for it. But it's extremely hard to standardize diamond, right? Because like they come in different shapes, different forms, whatever, different cuts. And so there's a company that is doing a diamond standard, what they call. Essentially, they're buying through auctions, they're buying a bunch of diamonds, and they grade them using like whatever computerized mechanism they have, and then they make boxes of equivalent value, right? So each box is equivalent to the next one. So it's essentially like fungible. You can exchange one for another. And so using this, they can sort of like make a commodity out of diamond, and all of a sudden you can now trade the diamond as if you were trading gold, with like a standard sort of like unit measurement. So that's very convenient. So there's commodities, futures, spots. Now we see ETFs. We see pretty much everything that traditional has to offer, options and stuff like this. So I think it's essentially sort of like looking at what's going on in traditional and trying to apply this sort of like in a much it grows much faster, obviously, because it has like a model, if that makes sense. Now, where do we see it going? I don't know, Tom, do you have an idea? The most recent stuff, so essentially the trends we saw recently were DeFi, decentralized finance, right? This was a big thing. Everyone rebranded their project DeFi just to make some money out of it. And then we saw something about, automated market making. This was a big thing. And when it came out, we were not very... I was not very optimistic about it, but we sort of like managed and we found ways to sort of like work with it rather than against it. And then what was the next thing? Oh yeah, NFTs. NFTs is the big thing right now. So, I don't know. You have these things coming in frequently, but I mean, I think that one of the big things for blockchain, broadly speaking, is to decentralize a bunch of stuff. For example, like you want to, I don't know, buy a property, you want to rent a property, everything, you can store all the information on the blockchain, for example. People talk about credential verifications. People talk about like different things, different applications of blockchain. So I don't think there's only like a financial application necessarily. And I think that, frankly speaking, like even some like traditional companies may start looking into crypto to essentially like evolve from something where you have to have like custody of, for example, like a share or something like this, to something that is more decentralized with like a ledger that is publicly accessible and stuff like this. So yeah, I think there's some potential, but a lot of improvements to be made.
And also the regulatory aspect has to keep up with the industry as well.
Yeah, I think that's something we will see continually evolve over the next few years, is something that I think can be relatively opaque becomes more commonplace. I'm curious, do you guys think there's ever going to be a world in which every asset manager needs to hold a digital asset of some sort for adequate diversification, or do you think it'll still stay a niche market?
So in order for crypto industry to be generally adopted, there is a huge barrier of administration process within the financial banking system. For example, the part of regulation is that for every different type of asset, they follow different regulation. However, for crypto currencies, for digital assets, the traditional industry don't know how to classify these assets. So that they don't know what regulation each individual asset should follow. So in the eyes of the traditional banking system, because of that, they don't know how to deal with them. They just choose to not deal with them.
Yet, I mean, yeah, this is a tough question. So, so just to give you an idea, I think more than sort of like every asset manager holding, you know, some crypto as part of their portfolio, I think it will be more like there will be like a shift from something that is a little bit archaic to something that will be more sort of like tech based. And the reason I say this is, for example, you have a couple of countries in Europe that are talking about a digital euro, for example, right? So I don't think it will be like a matter of, okay, you know, you will have to hold euro and Bitcoin, but I think that it's going to be sort of like a combination of both aspects, right? Something that will be regulated in some way by like a federal reserve or something like that. And then you also have the tech component of the blockchain, right? So I think it will be sort of like a mix more than, you know, like two separate words that you're trying to, you know, have like one foot in each of those words, if that makes sense. And I'm pretty sure that it will do this for currencies, but it will also do this for sort of like equities and other asset classes where they're going to, you know, issue sort of like digital equities. And in fact, we already see this. For example, I don't know if you guys heard about security token offerings. So STOs is the equivalent of sort of like an IPO, but on the blockchain, but they're categorized as securities, right? But they're digital securities. So I think it will be more of like blending the two words, essentially.
Great, and I think that brings us almost back to where we started, where even within the niche of crypto, it's this unique blend of finance and technology with all the complexities that administration and policymaking really has on the future of it, and something that's relatively characteristic of the broader fintech industry. So I appreciate you guys' color and explaining so many technical terms that might be new to folks on the call. At this point, I'll open it up to general questions. I have a few that were submitted ahead of time, but if there's anyone who wants to pop a question in the chat or ask Tom and Laurent anything, now's your chance. Yeah, Charles, go ahead.
Hey, thanks for coming on. This has been great. I was wondering if you had any classifications for what you would accept as a new client. Like, is there some trading volume that you're shooting for to make it worth your while to work with someone, or is it sort of an all-comers thing? You just sort of provide the tech solution, and however it turns out for them, you're still, you know, getting compensated for your work.
So that's a good question. Thanks. So for this, obviously there's a little bit of like a legal aspect to it, right? Like we wouldn't accept, for example, clients in sanctioned countries. But other than this, you know, like it's more or less up to the client as to like the usage that they make of the stuff we provide. So if they want to be profitable and they go the profit route, we're not taking a cut on profits, to give you an idea, right? So essentially they would rent, you know, using like a subscription mechanism, they would rent, you know, the algorithms. So it's a little, you know, like up to them as to like what the outcome is, right? Obviously, you know, like they can ask questions about, you know, like how it all works and stuff like this, and we're very happy to answer so that they understand what's going on. but we don't have any requirements in terms of volume or anything of that sort, just because we don't have, custody of the funds and stuff. But however, there is sort of like a barrier to entry in that, like the subscription fees or whatever they are, but they're somewhat significant. And on top of this, you also have to provide, for example, if you go the market making route, designated market making route, you have to provide some funds. If we're talking about crypto, you have to provide base and quote assets. So for example, if you are market making on token XYZ versus USDT, which is like a stable coin against the dollar, you would need both the token which you issued as well as USDT. So essentially you have to have significant balances in those two assets, plus being able to afford the subscription fee. So essentially this acts sort of like as a filter, right? For like projects who can, afford it and projects who cannot. And usually those that can plan ahead, for the event where they will need like a market maker. And so during like the planning phase and the preparation of their ICO or whatever it was, they sort of like put aside, a fraction of their tokens and the circulating supply, and they allocated it for future market making. And so that's something that differentiates projects that are of good quality and good standing usually versus projects that don't care about, the sort of like afterlife after they raise funds and after they list on secondary markets. So yeah.
Got it. Thanks.
Yeah.
Yeah, Raj, go ahead.
Yeah, thank you, Laurent and Tom, for being here. This was wonderful to hear. With so much going on in the crypto market, what has been your most exciting victory so far, and how has the recent trends have impacted your business?
The recent trend, you mean like the trend
price
of the
action.
price action?
Yeah, like the popularity in crypto. Yeah.
So in two ways, I would say, and maybe Tom, you can think of others, but for me, I would say two ways. First, you get a lot more attention from like sort of like traditional institutions, right? So they will come to you more easily. It's easier to establish trust with banks, for example, right? Like you say, you work in crypto, it used to be a bad word. I mean, there are still some issues, but now if you prove that you're on a KYC exchange, that like you are fully transparent and stuff like this, it's more acceptable. Especially with Visa, PayPal, and Elon. I don't know if Elon is a good publicity necessarily, but because he's more on the sort of like memeing side, but in general it helps in terms of credibility. Now in terms of the price action, a trend that we see recently, and this has impacted the business a lot, is liquidation. People have been in the space for a long time. Now they need to exit for a profit. And so now we see a lot of people going the liquidation route. We have a script for this, and the demand, the demand for this has literally skyrocketed in the past couple of months. Like a lot of people use those scripts, and it represents like a huge portion of the cash flow right now. So this has definitely impacted the business now.
Yeah, another thing is that since we're on a subscription base, so our the price for renting our algorithm is denoted in USD. So since a lot of crypto projects, they hold a lot of crypto assets, so their crypto assets increased. So the money they have increased by a lot. So in the eyes of our potential clients, our service now become much more affordable.
Yeah.
Amazing. Well, if there are, I don't know if there are any other questions. I know it's 2:45 and you guys want to be respectful of your time. I'm sure you have so much to do running your company. So do you have any final words, maybe any advice for any students who are interested in either learning more about HedgeTech or entering the fintech space as a whole that you guys want to leave us with as you part?
Yeah, I guess I will. I mean, as a final comment, I'll say if you want to, I remember when I was in school and, I was in part of the fintech club as well. I was like, okay, I had a lot of ideas. And I think like one of the key things is not to be afraid to pursue them. I know it's easier said than done, but usually like really, if you have sort of like this drive to make something happen and it's like technologically feasible, you will find a way to do it. Right? Because like if you have like the skill set, or you can find someone who has the skill set to, believe in your idea, then you will find, you know, like funding, you will find everything you need. You will find the right lawyers and, and everything else. So don't be afraid. If you need to build experience in like a more of like a bigger firm, for example, at first, and then move on to pursue your own venture, that's also something that is very doable. I have a friend who was also in the club, and we had, you know, very similar like drives for entrepreneurship, and he decided to work for like a bulge bracket, you know, company, and he anticipates that in a few years he will, you know, like quit and start his own stuff because, you know, he has like learned a lot. He feels like there's some kind of like a plateau in terms of the learning curve, and he sees also the inefficiencies from the inside, right? So it goes a little slower. You have less impact. You don't see the global vision. So definitely, if you have a drive, I would say pursue it at some point in your life because it's very fulfilling.
Awesome. Well, thank you guys so much, Laurent and Tom, for joining us today. Really appreciated your insight into all things HedgeTech and more about the crypto market making space. With this, we will let you guys go. And thank you everyone who was able to join today. We will see you guys at our next event.
Thanks a lot for having us.
Thank you.